Hey everybody, Josh Sigurdson of World Alternative Media here, and we are joined once again by Tim Picciott, and we are going to get into something really big right now because, look, we've been talking to you guys for years about what's going on with Deutsche Bank. They've been in a steady tailspin since 2008, and they're a really great example of the downturn and the continuation of the downturn. After 2008, the recession continued. It's just been papered over with debt, and it's just fake. Everything is fake. And what we are watching with Deutsche Bank is basically a slow incremental frog boil towards complete and utter bankruptcy. And just look at their share price over the last 15 years. It's astonishing that the company's even still around. Well, years ago, we went over all the scandals, all their rigging, spoofing, all that kind of stuff. We went over how their share price has been hitting all-time lows over and over again. We talked about how they were cutting 10,000 jobs. Then they said they were going to cut 1,000 jobs. And now, guess what, guys? They are cutting more jobs. And as this article says, Deutsche Bank weighs job cuts of at least 10% in rates units. So how many times can they cut 10% of their workforce? That's really the question here. But going forward, let's look at this article. It says Deutsche Bank AG is considering substantial cuts to the unit that trades interest rate securities, a division that survived a large-scale pullback as part of the lender's sweeping revamp in July. Chief Executive Officer Christian Sowing has concluded that it's possible to reduce enough of the associated technology costs to outweigh the loss in revenue. Okay, according to people briefed on the matter. The bank will likely cut a low double-digit percentage of jobs at the business, which employs several hundred staff, said one of the people, adding no final decision has been made. A cut of 10% would translate into fewer than 100 jobs at risk. Well, maybe that might not be as bad as the 10,000 and the 1,000 jobs, etc. But I mean, I think it's worth pointing out that they're in a really desperate position when they're cutting jobs and they're going, oh, we'll salvage this little area over here. And then months go by and, oh no, we're into the next quarter and they gotta cut those jobs as well. Nothing's safe at Deutsche Bank, it seems. And as it continues, it says, and I quote, "We are committed to a robust and broad-based rates platform and are investing in areas of our rates business where we see opportunities to grow our client franchise," Deutsche Bank spokesman Charlie Olivier said by email. The bank is currently putting the finishing touches on a review of the unit, which has struggled with low profitability for some time, said the people, asking not to be identified, discussing the private information. Findings could be presented at the bank's investor day in December. Sowing in early July presented a sweeping restructuring plan centered on pulling back from equities trading and cutting a fifth of the workforce. The lender said at the time that it wants to remain a leading bank in fixed income trading in traditional strength, but it soon became clear that the adjustments were needed there too. I want to note before I go to Tim that we also saw them try to merge with Commerzbank. I trolled Deutsche Bank outside their headquarters in Frankfurt a little while back. They did not want me going inside, obviously, because, well, my job was to ask, how are you guys even still alive? What central banks are propping you up? What kind of bailouts are you getting? How are you even still in existence? Tim, let's talk about the latest happenings with Deutsche Bank. What do you think is truly happening to this bank, and why is it even still standing?
Hey, Josh, thanks for having me on. And he did ask me last second. I was at a park, so that's why, I'm kind of dressed sitting here on a bench right now. And I am in Arizona. But for Deutsche Bank, there's just so many different problems with Deutsche Bank. And like you mentioned before, I'm really surprised that they are still around. But you would ask, what central banks are propping them up? And that would be the Federal Reserve from 2008 to late 2014. And then as soon as the Federal Reserve stopped printing money, then the Bank of Japan and the European central banks launched a massive program. And what we saw was the European bank asset program ended last December. The Fed's program was going to start selling $50 billion of bonds a month last October. And now not only are the Fed not selling $50 billion a month in bonds, now it's like every single day they have to inject like $100 billion into the repo market. So only like $150 billion swing the other way. This is sort of incredible. And I did have a podcast called The Perfect Storm is Brewing where I pinpointed those two exact things, saying there's no way that could possibly happen. Now, from the ECB standpoint, as soon as their program ended, they, just like the Fed, they had to backtrack on that. They've already relaunched their program. And so if you have negative rates, and not if, so the negative rates that they have in Europe, and I don't have the numbers in front of me, but let's say Deutsche Bank can borrow at just about zero or even negative. And then what that means is they're able to then keep these zombie companies alive. And the problem is it's not just Deutsche Bank. It's several. It's probably about half the banks that are just illiquid, and they can only survive. Now they can only survive because they're able to finance their debt at nothing or even less than nothing. Whereas, you or I, we can't go get a loan for negative point whatever. So if you are billions of dollars in debt and you've got trillions of dollars of notional value of derivatives exposure, you have to just keep rolling over the debt at lower and lower levels. And what we saw was the Fed couldn't even get up to, what was it, 2.25 or to 2.5 is the highest they were able to get up to. And we all knew, everyone contributing on this channel and a lot of our listeners, that there's no way that they could pull this off. And we were the crazy ones. And now, I think we've been completely vindicated, because now they've had to, backtrack and everything, but they're just keeping these zombie corporations alive. And now, one of the things that went on with the repo markets madness that was going on, and maybe I should back things up for people, is when you see that the Fed funds rate, all that really means is the interbank overnight lending rate. So let's say you're Deutsche Bank and you're short you're short 1% of your reserves, and you need to go out there and borrow it, because I think there's different it's different over in Europe. But let's say in America you got to keep 10% on cash on hand. So let's say one bank has 9, another bank has 11. Then what they'll do is they'll then swap funds overnight, so that way they'll both be at 10, and then they'll make money in between. Well, what happened last month is that banks, they didn't want that. Now, I mentioned that is only the interbank lending window if you go to the Fed's discount window. So the discount window is basically the buyer of last resort. However, if you have to resort to going to the discount window, it means none of the other banks want to lend money to you. So if none of the other banks want to lend money to you, then what is that going to say about your credit rating? What is it going to say about your financial solvency? And so what banks would rather do is banks actually decided that they would pay 10% overnight rather than having to go expose themselves and going to the discount window. So now, of course, the Fed did another bailout, and John Snice and I have talked about it. You and John have talked about this. They did, a self bailout where now, instead of having to expose what banks are actually in trouble, they say, okay, well, we're just going to let all the banks borrow an aggregate of $100 billion. So now we don't actually have true price discovery. We don't know where things are actually going in the market, and just yet another problem that we can blame on the Federal Reserve.
Yeah, well, it always seems to come down to that. We've been talking a lot about the protests and the chaos going on all over the world right now, all these uprisings, and all of them could be traced back to central banking. Go figure. Now, of course, there's been a lot of problems at the ECB, and there's been a lot of talk about, Mario Draghi is basically begging all the European governments to come in and save the ECB at this point. That tells you a bit of where they're at right now. Mario Draghi, head criminal at the ECB, soon to be replaced by Christine Lagarde right away. That's going to make a huge difference. The IMF woman, who's actually also a criminal, is going to come in and save the day for the ECB. I'm sure they'll go over very well.
Yeah, did she get in trouble in France? Didn't she some finance minister in France got in some sort of trouble over there?
Yeah.
I remember.
Yeah, she got in trouble, and I remember her being indicted. I can't remember exactly what it came down to, but when you're one of the top people in the financial system, you're probably going to get off scot-free. I do want to note quickly, because I know people are going to comment about it. Tim, you have a popping sound coming from your microphone. Maybe just check to see that it's plugged in all the way, or something. I don't know what it is, but anyway, just thought I'd mention that before I get a million comments about it, because that's the way it is. But I want to go into something else also that I find interesting regarding this story is the derivatives exposure overall. I mean, the derivatives exposure of Deutsche Bank is absolutely enormous. I mean, I remember in 2016, beginning of 2016, when I first talked about Deutsche Bank here at WAM, we were talking about how it had a derivative exposure at the time of about $75 trillion. That's the GDP of the world. And last time I checked, it was somewhere around $45 trillion. Ooh, big upgrade there. Well, the GDP of all of Germany is what, $3.5 trillion. So when you have a $45 trillion derivatives exposure with a $3.5 trillion GDP of a country, it's going to involve all these other companies coming in. And who wants to save Deutsche Bank? Nobody. And nobody's going to, because I do believe this is off limits for being saved. I think this bank is dead. It's basically dead man walking, and we're going to watch this thing completely collapse very shortly. So
wait, are you saying Are you saying the bank is Bernie Sanders, dead man walking? No, sorry
Oh
about
no,
that.
that's bad. That's bad. Yeah, I came this close to almost giving Bernie Sanders a heart attack here in Las
And it
Vegas.
was, yeah, and it actually was in Vegas. But one thing I think I've heard floated around is that popping sound gone? But of course now a
I'm not
fighter,
hearing it now, but I hear an airplane.
yeah,
It's all
a
good.
fighter, a fighter jet happens to go over to me right now. So sorry guys, I can't control. Okay, another fighter jet. So we got two fighter jets.
The fighter jet Tim is heading to the next banker war. So I mean it's fitting that we're talking about Deutsche Bank, the bailouts and the central banking system, and you have fighter jets going by because that's the only force for holding this massively bubbled global economy from the complete brink of disaster.
Yeah, well, I did want to mention one idea I think I heard thrown around where they wanted to create sort of a bad bank where Deutsche Bank would spin off
Yeah.
all of its bad assets and kind of saddle that with one bank that would probably eventually end up going bankrupt while they then sort of retain the name. But it's still, it's all these shenanigans that are going on. And I don't know if anyone happened to catch suffer through the Democratic debate, but I watched about 15 minutes of it. And one of the parts that I did watch was Elizabeth Warren. And I hate talking about politics. One of the things I watched was Elizabeth Warren talking about, I've only studied one thing in my entire life, and that's why people become poor. And I'm like, really? Because, I mean, every single one of your policies are what makes people poor. It's when you print money, the wealthiest people in the world have access to that money first, and then all the rest of us slaves who have to borrow money at 10 to 16% or higher. Whereas Deutsche Bank, and I don't know the exact number they borrow at, but the big banks are borrowing at next to nothing. And Germany was actually selling a 30-year bond for 0% about a month or two ago, if I believe. I'm not looking at notes right now, but it just shows the financial that's going on. But we're in a situation where it's damned if they do, damned if they don't, especially when it comes to the pensions, because most pensions right now have about 50% of their bonds or 50% of their assets in bonds. Those bonds, they've used assumed interest rates as high as, their overall assumed interest rates are usually about 7 to 8%. And I actually discovered on accident when I was researching one of my clients' pensions, which actually had about 78 to 80% bonds, and it's a company that everybody here would know, big Fortune 500 company. And what I discovered is there was actually a law that the government passed that said that the pensions are forced to price the bond, get their assumed interest rates based off a trailing 25-year LIBOR. So you can use interest rates from 25 years ago, which I think last time I checked was as high as 6%. So it was an average of the past 25 years. So even all the numbers that you see that are terrible, they're even worse because they're overstated. Now, the problem is if the rates end up going up, then what's going to happen, and it kills me because I'm Italian, I'm holding on to this right now, so I want to talk with my hands. But what happens is if the rates end up going up, then the underlying of the value of the bonds are going to collapse. So if they had let's say you've got $1 million bond and rates go up 1%, it's a 10-year bond. Well, now your underlying position is now 900,000. And people will say, oh, we can just wait till maturity. Well, guess what? Now that all the baby boomers are retiring, they can't wait till maturity. In 2008, the average baby boomer, or the oldest baby boomer, was just turning 62 years old. So they were just starting to pull out from their pensions, just starting to collect Social Security, in very, very small amounts. Well, now it's 11 years later. So now they're, the oldest one's 73 years old. And so the system does not have another 10 years, 11 years to go, try to wait things out this time. And so if rates go up, the underlying values of the bonds are going to plummet. And if rates stay where they are, then they can't afford to pay their obligations. They're screwed both ways. I actually got in trouble in 2011 for sending a client an email talking about exact situation. And the company I was with at the time was like, oh, well, you can't make this prognostication about this. And I'm like, well, 8 years later, I'm like, I'm right. But and actually the funny thing is the client who I emailed that to is the same client with the pension thing, but just by complete coincidence now that I think about it.
Yeah, well, but you know what I find it is interesting with Deutsche Bank. Not only did they try out the whole bad bank thing, they also they had to be. They resorted to becoming a small lender overall. They're still pretty big, but I mean, compared to what they used to be, they're a small lender. And also, I also have to note that they had to redo their living will test for the Federal Reserve not that long ago. They were downgraded by the S&P. And on top of that, I mean, they've had all these scandals plaguing them over all this time. And I find it interesting that considering their cash deposit ratio, it's bad. It's still not that bad compared to most of the major banks. And what does it tell you about when Deutsche Bank's balance sheet is actually kind of looking a lot better than a lot of the major American banks that people think all is well, all is good. I trust Bank of America. I trust all these banks. And in the end, they're actually more bankrupt overall as far as their holdings than Deutsche Bank is, which that should give everyone a big fat lesson right here that they are not safe in the financial system, and that's why people need to take the proper precautions now, not later, not wait until, it all explodes and go, oh, well, I guess it's all exploding now, I better get out. No, that'll be a bit too late. You need to be preparing for the future now, and that's something that you've been working at for a lot of your career, Tim. Before we close this off, can you give some of the solutions and tell people where they can, get involved and become a client of yours?
Yeah, thanks, Josh. So first, I just want to bring it back to that living will that you talked about. Well, one of the things they make the banks go through these stress tests. Well, and I know Peter Schiff has talked about this, so I know we hear it in the comments if somebody heard him say it. But one of the things that they don't actually test for is a scenario where you have basically the economy going down while interest rates are going up. And that is really the worst case scenario. And that's probably actually the most likely scenario. And so what I just mentioned before when I talked about, because it's a very tricky situation, because in 2008, if you were about to retire, what you could do is leave your money in bonds. You're still getting paid something. And as rates were going down, actually the underlying values of your bonds were going up. So it was basically a good situation for people to be in. Now, you have to look at, if you're a retiree, you've got to look at 40, 50% of your money either have to be locked up in bonds where it's, there's really not a lot of safety there. There's not really a lot of income from there, which are the two reasons to be in bonds. But, it is important, though, to make sure you're not just all in stocks, because then the stock market can go down as well. And most people who have 401ks, they're limited to like 12 to 16 different options in there. And so, if you are close to retirement, there could be some ways to get your money out of there. There's things called in-service withdrawals. But anyways, if you guys want to go to thelibertyadvisor.com, there's ways where you can actually schedule with me. I'm doing free 15-minute consultations for people. And that's not going to go on forever, because we're hiring new people soon, and it'll be the new people who end up eventually taking over. So it is, relatively limited time offer. But I did a podcast, the client video at first, and then it became a podcast. So you guys can actually check this out on my channel, October 3rd of 2018, where I talked about, my strategy going forward. And so what I did was I had basically all of my, and this is not, just blanket financial advice over here that you should really know what you're doing. Talk to your own professional, past performance, no future, blah, 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 all this stuff that I'm bound by being licensed. So what we did was we had a tiny bit of the portfolio that we invested in downside protection, AKA put options. Then we had the rest of the portfolio that were long various indexes. And so basically what I thought was going to happen is that Donald Trump would make the markets go up, then the Federal Reserve would lose the excuse to cut rates, and then that would then make the market go down, and then the Federal Reserve would then have to renege on that and then have the rates lowered again. And I had podcasts where I laid out that whole thing the week Donald Trump was elected. So that's exactly what's happened. And so we had a situation where basically I was able to sleep at night. My clients were able to sleep at night because if the market went down, we knew that there was a finite amount that they could possibly lose. So it's sort of like buying, homeowners insurance. If you get a fire in your house, and this helps build your house back down. And if you don't have a fire, then you get the hopeful appreciation that's there. So really, we're hedged in the event that the Fed prints trillions of dollars. We're hedged in the event that the market says we don't care about your trillions of dollars, and then we're going down anyways. And then also, for the right people, we throw in some crypto. And then, I do recommend gold as well. And we'll help take care of all that for you. I'm also probably the only financial advisor you're going to find that actually can use IRA assets in crypto where you hold the private key. And that was something that I was willing to lose my job and get a $17,000 fine over, just because I want, and the fine was, I left a company 1 year early out of the contract, but it's something I felt so strong about. And we've just been nailing it. You guys can go back, check out a full 3-year track record, all on video, podcast, the whole deal, if you guys want to, audit what I've been saying. And really appreciate the opportunity. This is the last second thing. Otherwise I would be at my house doing it for my house. Yeah. My kids just got home. So, and I found, I think the only tree in Phoenix, Arizona, that's actually, I don't know if it's, I think it's just dead leaves, and it looks like it was fall leaves, but it's just dead, actually. So sorry, guys.
Yeah. I know the environment well, Tim, being in Las Vegas. Everything's dead or it's fake. But I appreciate you going into all of this with us. It's really important, and I think that people need to know all fiat currencies eventually revert to zero. So people might say, oh, you've been bashing Deutsche Bank and trying to crash it. I'm like, I'm not going to crash it. Tim's not going to crash it. This massive amount of central planning, this massive amount of debt debt. That's what's going to crash it. And we're
And guess what? You'll
that.
be right. Guess what? If you would have, when I started looking at Deutsche Bank and putting it on like a list of potential things to short, because I was right after the big short, and somebody asked me, "What's the next big short?" And I said Deutsche Bank. Okay, what was the stock at the time? Probably 17. I don't know. Do you know what it is now? Like, what is it, 5 or something? I didn't look it up before we came on.
Well, I can look at it. I can look at it right here because I did have it up in a tab here, and it's at 7.9.
Yeah, so I mean, you still would have, still would have doubled your money. I mean, obviously, you got to be really careful shorting stuff, and that's, there's other ways to do that, and that's definitely talk to your own advisor for that one, and we're responsible for any loss on that one. But you still would have made a bunch of money had you done that. So yeah, has it not collapsed? No, but would you made money on it if you were shorting it at the time? Yeah, you would.
Yeah, and it's just basic economics at the end of the day. And I want to say to everyone, food, water, shelter, self-defense. You're not gathering things for the toughest guy on the block, as I always say, because I feel like it's really important outside of the monetary aspect for people to be responsible and to be able to back themselves up in that way and be sustainable. And of course, gold and silver, in my opinion, not investment advice, but I do believe that gold and silver is a practical thing to do. Looking at history, it's preservation of value. It's not even meant as an investment necessarily. While you could, I would suggest, from my own personal perspective, in my opinion, it's much better to just ensure your wealth with it. And of course, cryptocurrencies that are properly decentralized, and there's lots of examples of that. Most cryptocurrencies are terrible, but there are some that are amazing and will change the world forever. So let's look into it and do your own due diligence, folks. As we close this off, I do want to tell everyone, if you've made it this far, congratulations, you're not a slave. So please comment below short Deutsche. So I know it's a survey. So I know that you've watched this far, because we do get a lot of comments on our videos from people that I do believe don't actually watch the videos. The most negative comments tend to be people who comment within the first 10 seconds of publishing a video, probably bots. Nonetheless, I want to do a test. So comment below short Deutsche, and I will know that you watch this to the end, and you get a big shiny star. So I appreciate it, guys. Thank you, Tim, for joining us again, and we'll be going into this much more in the future because there's a lot more to talk about on this subject. This is a never-ending kind of spiral out of control for the global monetary system. It's not just Deutsche Bank. I just really dislike Deutsche Bank, so it feels good being able to say, look, we are vindicated. They're terrible, and they're going down, and they deserve to go down. So anyway.
I mean, it's only fitting that their ticker symbol is DB. So
yeah, exactly. So I appreciate it, Tim. And until next time, this is Josh Sigurdson with Tim Picciott signing out from World Alternative Media. Find the truth. Be the change. Like what you see here, Wham! Don't forget to check the links below. GoFundMe, Patreon. We cannot do it without you guys. Every donation is extremely appreciated, as we're getting incredibly shadow banned. We've lost 80% of our audience since January of 2019 and counting. They are ripping us apart here on YouTube, and the only thing we could do in the meantime as we prepare for the next big step is to ask for help from the viewers that support our free information that we try to post on a daily basis. You can also find us on Subscribestar, where just $1 a month, that's all it takes, $1 a month is all it takes to truly make a huge difference. If everyone gave $1 a month, it would change everything for independent media, and we could win this information war, and we can defeat the mainstream medias eventually. And of course, on Subscribestar, we post subscriber-only content that you'll only see on Subscribestar. So make sure to pledge there, become a patron. That makes a huge difference, guys. And also, don't forget to check out our Bitcoin address below in the comments and description, as well as on the screen for you to scan, if you please. And also, don't forget to subscribe to us on the alternatives. We will likely be deleted by YouTube in the next 2 years. It's already happening on a vast scale. So make sure to find us on float.app. That's FLOTE.app. At Josh Sigurdson, as well as at Wham, W-A-M. Float.app is replacing every social media, and I mean, it's just incredible the opportunities it provides for not just creators, but for the average person who wants to get away from these nannies telling them what they can or cannot see. They plan to replace Facebook, Twitter, YouTube, Twitch, Tumblr, Reddit, and Patreon. You could subscribe to us on Float and pledge with cryptocurrency. cryptocurrency. It's really innovative. We are also on BitChute at World Alternative Media, as well as so many others, Minds, PocketNet. You can find us at World Alternative Media on Instagram. There's many options. And finally, don't forget to join us at Anarchapulco 2020, the famous event, the best Liberty event known to mankind, other than perhaps Anarcho Vegas 2020. There are two major events coming up that we are extremely excited about, and you can use promo code WHAM, that's WAM, and save 10% on your tickets to these legendary conferences. There's so many amazing people speaking there. You won't want to miss it. So make sure to support in any way you can, even if it's just sharing our videos, pressing like, pressing to be notified. Anything helps, folks. You are the change you wish to see. Thanks for watching, everyone. And until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.
I'm sure you have already changed people's minds in your young age because you're involved, and I like that.